All right, good morning, ladies and gentlemen. Today is May 27th, 2020, and I'm back with another live show. I had to skip it last week. I had a vet appointment. But anyway, last week was kind of weird because Jeffrey had some technical issues with the back end recently, and he had to fix a couple of things. So we went for a little period of time last week where certain things weren't getting updated, and he made an effort to keep the keep the pending and the open all updated and good. But what happened was he explained it to me that his power went out during the update and it messed up some things. And of course he has backups of everything, but he had to rebuild all the stock data files, open, high, low, close, volume, all that stuff. So anyway, he got that all sorted back out over the long holiday weekend. So I hope everybody had a good Memorial Day, and we're back and everything is back and working just fine. So thought what we would do today is take a look at the one trade that is on the triggered today list to start off with, and we'll just look at that real quick. It's DLR is what it is. Right here on the if you go to the pending trades, right at the top, any of the stocks that closed over the trigger price previous session are, as you know, a buy for the next day, as long as they're still over the trigger price, right? So this DLR, which is this is kind of interesting. It's like a data center REIT, I suppose. And I was looking at it this morning, gapped up, of course. The whole market gapped up, and has been having a fairly significant fade ever since then. So anyway, yeah, so this is a buy. Stop, you can see, is kind of right below this little consolidation pattern here. So yesterday was kind of weird too because the market gapped up and then spent most of the day kind of fading down, and then today we got the same thing. I saw a chart recently that showed that the majority of the gains in the market are coming from like the overnight session. It's really weird. Like they bid the futures up overnight, and then when the market actually opens, regular trading hours, it tends to not do much. It fades down or just chops around sideways or whatever. So that's kind of weird. But anyway, so this is triggered today. Pattern actually looks pretty decent, to tell you the truth. So you see it now, and it's obviously a little bit below the trigger price. So couple things you could do. You could get in a little bit below it. You could wait for it to come back up through there, get it right at the trigger price. But not a whole lot of risk here. It's kind of an expensive stock, and so the stop's really tight. And so either these lows of this pattern are going to hold or not. But it is starting to form a pretty decent cup. Sometimes you get mornings like this where the market still sells off like right from the open, and then you get a late day rally. And so it wouldn't surprise me to see this thing come up and actually close the day above the trigger. Kind of depends on what the overall market does, obviously. So it's a pretty big fade this morning, to be honest with you. It looks like in the futures, the overnight high was for the ES was around 30.35, and now it's back below 3,000. It hit 29.90 and it's 29.93, and so it's a pretty good fade there. Let's take a look at. I like to look at the SPY. The SPY shows it shows the open, I believe, better than the SPX on these charts anyway sometimes. But so check it out. Last week we had this really kind of dull, narrow range. There wasn't much happening last week, right? It was kind of like yeah, I guess pre look at Friday, pre-holiday, pre 3-day weekend. It was really a boring day, but last week the whole week was I would say was definitely the narrowest ranges, and it was kind of sideways. See how it just gapped up on Monday and then just traded in this little tiny sort of narrow range, and each day was kind of dull. And then Wednesday and Friday were extremely dull. And so that was kind of unusual just to see, considering the context of everything that's going on, to see an entire week that was basically just range bound in a little tiny range. And so it's interesting. I have my bar set here for on my settings. I have somewhere in here. Let me see where it is. That's not it. Here we go. Open versus close. And so basically what that does for me is it colors the bar red if the close is lower than the open, right? And so like this day right here, right? The market was obviously higher than the previous day, but you can see how it gapped up and then closed a little bit lower than the open. So I think, excuse me, I think that gives a pretty accurate picture because if you're trading during normal market hours, what's important is, how did the market do for, that session? And I've always liked to look at it that way. I think it gives a little bit better picture. But anyway, so here we are, humongous sell off, amazing sort of recovery. And just recently, like, a week ago Monday, this little gap up here was pretty amazing because the market was starting to look like it was going to stall out. Let me go to the actual S&P here and pull up this chart. And so what happened over here was, and this is kind of interesting because there's your 200-day moving average, which is basically just moving sideways. And so right now you've got the market vacillating like right at the 200-day moving average, which is kind of interesting. But what happened over here is the market, obviously rallied strongly off of the lows, and then it was kind of, I'm not huge on Fibonacci, but I drew this on here anyway. And so it was kind of struggling at the 61.8 retracement level. Oh, I see. You can't really see that on there. Let me move that over just a little bit. There we go. So yeah, 61.8, which pretty, it's a pretty solid retracement level off of, considering everything that's going on, right? So anyway, what had happened was the MACD, the market just kind of ran out of steam. It basically just sort of ran out of steam, and you can see this MACD came down and started going negative, and then there was the miraculous good news, right? It's amazing because I sort of get the feeling like the administration and the Fed and Mnuchin and Powell and Kudlow and these guys, Trump tweets and all that, they're doing everything they can to try and pump up this market and keep it, keep it together. It's like the one thing that I think they believe that if the market holds up well, then. And so I'm pretty sure that it was a week ago Monday we got all this good news on like a vaccine, right? Vaccine for the virus has been like sort of the big thing that the market's been sort of pinning its hopes on. And you hear all this news about all these different companies working on it. So, vaccine hopes, hopes for a recovery, hopes that the economy is bottomed out, reopening, all that kind of stuff. So, it's kind of a news driven market, to be honest with you. But I don't know. Um, the nice thing about the system is it's just looking at individual chart patterns, and so it doesn't care so much about all this stuff, the news. But the news definitely kind of driving the market. Look at the Dow has when we had this initial sell off here too, right? When we had the initial sell off, after about 3 or 4 days, uh, that's when people started like kind of freaking out, right? Because that Dow, I mean, it just sold off starting on February 24th, right? And a little bit of a sell off there, but that was a gap down day, and then by 4 days, by 227, the markets were in turmoil. CNBC was doing their markets in turmoil special. You had the Dow down 1,000, all that kind of stuff. And so the market's kind of rallied back up to where everybody initially was freaking out because the market was tanking, right? Then there was that rebound and then it all fell apart. But that's pretty amazing to see that the Dow's sort of trapped right here at the 61.8. Of course, the Nasdaq has basically. So I drew this little zone here where the gap was. Yeah, the Nasdaq, I mean, has basically come all the way back, right? And so pretty amazing. Of course, it's the Nasdaq 100. Like, handful of stocks are accounting for the majority of the weight in the Nasdaq. Let's real quick. Might as well look at the Russell. Yeah, Russell, same thing. It's sort of struggling with the 61.8 here. And so what I've noticed is that I noticed this morning like a bunch of like the really beaten down stocks that you wouldn't really expect are gonna recover much. They had big gap ups, and so the airlines had big gap ups. Look at that, and they're all kind of faded down and closed the gap. So that's sort of interesting. Carnival Cruise Lines, and so yeah, there's a little bit, they were talking about rotation yesterday, and so Amazon's kind of in a little pullback here. I think Facebook had the big gap up yesterday and kind of selling off a little bit. So there's definitely something weird kind of going on here, right? When you see let's take a look at Microsoft. Yeah, look at Microsoft. Bearish engulfing candle yesterday, little sell down here. Apple, look at Apple. Apple almost came all the way back. Oh, by the way, I wanted to point this out. As long as we're here. So you guys remember back when we had the big sell-off, and then right around the end of March, Jeffrey had the brilliant idea of putting together a recovery watch list, right? And so you go in here and I know you guys have seen the note at the very top of the thing. So anyways, we put together this recovery watch list here of a bunch of brand name, large cap brand name stocks that Jeffrey expected would recover after a humongous sell off like that, right? Kind of made sense. And so, but the funny thing was that, it was kind of like everyone was freaking out. The market was tanking. All hell was breaking loose. And Jeffrey said, oh, these stocks are going to bounce back from this. And so, take Apple, for instance. So on 325, 324 to 326, 327, we put this up and we did a show about it, which is actually you can see the recording down there. And so this was the concept, is that you get a sell off like that, you're likely to get a bounce. And so he calculated out likely bounce targets. And I haven't spent a whole lot of time on this, but we did at the time that he put this together. And so, here was the day that Apple was added to the recovery watch list. And then here were the two bounce targets, right? The rebound targets. And lo and behold, turned out pretty good. Another big name stock, same sort of thing, Microsoft. And of course, nobody knew that there was going to be like this, big V-shaped sort of, V-shaped recovery in a lot of these stocks, but it worked out pretty good as far as that goes. So any of you guys that were taking that seriously, so there's AMD, right? There was the stop. There was a day it was added to the list, the targets. Unfortunately, there was actually a swing trade in AMD over here that got knocked out just barely. Let's see what else was on here that was interesting. Home Depot and McDonald's. I don't know that I haven't marked all these up. Yeah, I didn't mark Home Depot up, but clearly Home Depot came all the way back to the prior highs and is sitting practically right there. So it definitely hit both the targets. There's McDonald's. I didn't put the actual levels on here. I mean, as far as the numbers, but this would be target 2. Obviously, obviously the first target got hit and still struggling a little bit, but this would be the second target. So um, and so there you go. A few of them, and even the indexes are in here. So where oh, there it is, the Qs, right? So take a look at the Qs. Obviously, there's the price where it was added. There's the stop, and there's a target. So 205 and 220 on the Qs. I don't have it drawn on here, but 205, 220. So obviously it recovered pretty well, a little bit better than the other indexes. But so anyways, that's what the recovery watch list was all about, and a good majority of those have recovered. And so that was sort of the whole point of it. Adobe actually like gapped up to a new high yesterday, so it obviously hit both of them. But anyway, so you can take a look at that, and it's kind of it's kind of served its purpose, right? Because the idea was to get everybody some decent, a decent list of stocks. And of course, like I said, that was a couple months ago, and so a lot of those stocks have already recovered. Most of the majority of the big name ones have already hit both their targets, and so it is what it is. And now we're just so we already went over DLR. Take a quick look back at that. Yeah, continuing to fade. The market actually looks like it sold off pretty significantly this morning. It looks like kind of bottomed out there when I was talking about the futures. So we'll see what happens with this. So without further ado, let's take a look at the open trades here. I always like to go over the open trades. We've had some that got closed here recently. Kind of a mixed bag, but so there you go. The DLR is on the open list today, and then there's actually only 4 other ones that are open, and this DocuSign DOC, this thing's been open since 4/13, and it just keeps on a trucking. Let's take a look at that. So I like to start at the bottom because that's well, I'm still on my second cup of coffee here today. All right. Well, wow. Hey, look at that. The trailing stop was actually, I didn't update this last night. Like I didn't draw the trailing stop. So there you go. This one's finally closed here at 125. That's where the trailing stop was. This is actually probably, let me just mark this real quick and then I'll zoom back out. T stop 125. I've been waiting for this to finally sort of to do this, right? Pretty amazing, right? So back over here, it triggered at 92, and then this was the day after it triggered, and then you can see it's a pretty volatile stock. I mean, look at where the lows were over here around $80, and then basically just a straight shot up here to where it was. And then so today it's finally looks like it's starting another actual, like a real pullback. And you can see all these, how the trailing stop sort of progressed as the thing went up. Now the initial stop was down around the lows of this pullback. So that was a pretty quick pullback, only a few days. But price wise, you're talking 98 to 78. So that was pretty significant at the time. And then it started this sort of recovery march higher and barely looked back. There was a little consolidation over here. Target was at 105, which it hit in pretty short order, to be honest with you. And then over here it looked like the rally was going to be over, right? Like it kind of hit the target, and then this particular day, which was probably a bad day in the market, but typically I see a reversal bar like that, and you think, okay, now it's going to sell back down. But I guess this was sort of one of these guys do digital signatures, and so which is probably a really hot business right now, right? Legal documents and that, being able to sign them over the internet, that type of thing. So they're probably doing gangbusters. But anyway, so a lot of what's going on right now is news driven, like I said, and so there's a lot of story stocks out there. A lot of story stocks, stocks that and different things that people think that now that the world's a little bit different, they can make up different sorts of stories for companies that are going to be successful in this new normal. But yeah, tremendous winner there. As of the close yesterday, it was up roughly 40% from the trigger price. So that's pretty good gain locked in there. And yeah, it's kind of nice that the trailing stop was right up there, really sort of nice and tight. So not too much was given back. It'll be interesting to look at this over the next couple days to see just how this sell-off sort of progresses from here. Whether today's low turns out to be low and it bounces, or whether it keeps going. So, all right, well, let's move on here. So this one's going to be moved to the closed list when the update gets run tonight. JKHY, Jack Henry and Associates. Here's another one hitting the stop. Interesting. The good news is that when they finally hit the trailing stop and get closed, and this was a pretty good one too. Not too shabby. You can see the pattern there. LRN. Let's look at this one. Yeah, kind of hanging in there. Trailing stop. Actually, the trailing stop now on this got moved last night. It's at 23. You can see the trigger was at 23.50, and so this trailing stop is getting moved towards the break-even point fairly quick. So this one's looking okay, considering the fact that at this point, very minimal risk. So 23 even is, yes, let's see, there we go, a little bit higher. So there's trailing stop here. So the pattern's still kind of intact. If I draw a trend line up across these lows here, it's either going to hold it or it's not. Right? So if it breaks that trend line, 23 is pretty good place for a stop right there. If the market holds together a little bit, I mean, if we go into a sell-off here, the idea is that hopefully the trailing stops would have gotten trailed up enough to minimize the risk. And so yeah, this looks just right to me. If this trend line breaks, and 23 is a pretty good spot to have that stop. Or it could hold like it has. There's been a couple of times where it had a 2-day pullback, like kind of looks similar to now, and then just the next day just rallied right back up. So this one's actually still looking pretty good. Then of course we have Walmart, and this one's kind of weird. If you ask me, this gap up here, and that may have been earnings. May have been. I'm not 100% positive. Actually, I think earnings were back here though, so that was something else. I'm not sure what that was, but anyhow, yeah, this one. There's the initial stop, and the trailing stop got moved up, sort of based on, I think, this kind of anomaly bar here, and it's looking a little in jeopardy right now. So this is kind of a funky pattern, if you ask me. I think the earnings came out over here, and then it kind of started recovering, and then I'm not sure what this what the news was this particular day, but anytime I see a humongous gap up like that, I'm always suspect of it. So, and then of course there's the new one here, DLR, which is just sort of poking at the trigger here. So there you go. The interesting thing now is, and you probably noticed this last week, is that since Jeffrey was having to rebuild all the data files, we didn't really have anything going in the pending trades, right? So I think there was a couple of stocks in there on the pending trades, but now we got a whole new batch, and so it'll be interesting to see which of these trigger and how they look. I thought maybe we'd take a look through these real quick, just to see what looks good. The pending trades, I always like to kind of keep an eye on the charts there and kind of pick the patterns that I think look the best. Now this one's kind of that's a weird pattern right there. So, but you can see what happened last time. It had a tremendous I won't say tremendous, but it had just a beautiful sort of channel break, came up and then ran up really quick over about 4 days and hit the target, and then you can see the stop moved up really quick, and so that was a real nice, decent, quick trade. This pattern here is weird, to say the least, and um, no idea what that run up was about, but now it's sort of selling off. And so, anyways, there's nothing about that really looks all that great to me. So, and that won't set up for a while. Eli Lilly's pretty good pullback mode here. And by the way, I've gone over this a bunch of times, but just to let you know, the trigger price is like way up here. And so for any of you new folks here, the way that this works is it pops onto the pending list, and the trigger price is typically like, way above the current price. And then what happens is, as the stock is having a pullback, in theory, what it does is, and this is probably not the best example, but it pulls back and then it sort of finds a bottom, consolidates, and then this will sort of on a day-to-day basis will come down. The trigger price will come down to meet the price as it starts to cycle back up. So, and I mean, ideally, right? The stock price behavior can be extremely erratic, but with the programming and theoretically, you get a nice sell down in a stock that's in a primary uptrend, and then what happens is it consolidates and you get like some real tight consolidation, maybe a pivot low and some narrow range days, and then it begins to turn back up. And the trick is that we want to catch it. We want to catch it back on the upswing when it resumes its uptrend or cycles back up and forms like a big cup. And so anyway, what happens is the initial trigger always starts off like really sort of extremely wide and then just comes back down. Let's see if we can find a better one. Oh, here's a good one. This is a pretty nice like swing trade pattern, right? So the stock's in a nice uptrend, and you come down and you start getting some narrow range days like this. So the trigger on General Mills is 61.40, right? And so, excuse me. So if we get like this nice consolidation here, and then over the next few days, I mean it's hard to tell, but then you get the upswing again. And so right now, and that doesn't mean tomorrow or after the update tonight that the trigger is going to be at the exact same price. It could move a little bit. It could come down a little bit, be even closer. So, but keep an eye on that, because that's a pretty decent pattern. Like so far out of what I looked at, and, and it's hard to generalize right now because we had this crazy sort of price action here, in March. in March and April, we had this crazy price action. But you can sort of visualize, a nice swing trade pattern setting up here. And it may take a little bit longer to play out. I mean, generally, if it bases out for long enough, then that's even better for the upswing. So General Mills looking pretty good. I like the look of that. Clorox. Clorox, a little bit of a sell-off here today. It looks like it's trying to have a reversal bar. So um, trigger price still way up here. I'm looking over at the market here, and still looking a little sketchy. Still looking a little bit like it wants to maybe, we've had a humongous run up, and so I think everybody's gotten kind of either complacent or bullish, or they think the Fed's got your back, or and they kind of do. But I heard something really interesting yesterday. A guy on CNBC, his name's David Rosenberg, said that the Fed has added $3 trillion to their balance sheet over the past X amount of time, and the market cap of the stock market is up 3 trillion over that same period of time. So it's almost like a he was saying there's a 1-to-1 correlation between Fed balance sheet expansion and the stock market on a market cap basis, which I thought was interesting. So this one's kind of interesting. Luminex, Health Services. Trigger on this right now is 32, which is, well, that's pretty close to the price action right here. So big run up, kind of a blow off, island top there, and sort of selling down. But stock like this, that made that huge move. I mean, this thing's doubled since last fall. Has a sell down like this, and ideally you'd get some consolidation, and then it wouldn't be out of the ordinary for this to sort of base out and kind of come back up to this prior area here. So that's another halfway decent one. Ideally, again, it would base out for a few days or a period of time and then start the upswing, but you just never know with the type of volatility we see in the market. You get these long range crazy days, but this one's kind of setting up okay. Not too bad. Gilead, you can see, we actually had a swing trade over and all this craziness here. You can see all the stops in that. So it's kind of the problem with leaving all this stuff on the chart is that it kind of skews what you see on the chart. It would almost be better to look at it like this, right? So what we're seeing here is kind of something. Well, I won't say it's similar to last time, but it's a similar pattern to what we see on a lot of these swing trades, where you get there's a big run up, and then you get a nice orderly pullback, and look at how it's basing out right here. So that looks pretty good. It's a pretty nice base that's building. So let's see, the trigger price on Gilead as of today is 74.50. So there we go. It's getting kind of close here, actually. So yeah, if this trend line, like, it looks like it's trying to break it here. It's a couple different ways. It doesn't. There we go. That looks pretty reasonable, I would say. And then take it right across, right around where today's high is, really. So yeah, that looks pretty good. Big sell down. Nice base being built right here. You can see these lows. And so all it's got to do is like start swinging back up, close over the trigger price. That trigger price may move tonight, or it may not, but shaping up pretty nicely. I kind of like the look of that. Moving on, Citrix Systems. Decent little sell-off. Nice little base being built here. 141.50 is the current trigger price. So it's got a little work to do, but you can kind of visualize it over the next few days, or into even next week would be ideal for it. Kind of chop around, base out, and then turn back up. Right, form a nice little cup there. So that's a pretty decent little pattern too. Real quick, let me go through the rest of these. This one's got a little bit more work to do, it looks like. Still kind of on the downswing, so the idea is that consolidate, swing back up. CAG is not looking too bad either. Trigger price 33.40. So that's like right here. Interesting. So it's not going to take too much. I'm going to mark that one just because, and be sure that if you're interested in something like this, that if it takes a couple more days to trigger, make sure that you follow the actual trigger price, because that can change. Actually, it looks like it's in a pretty good spot here, though. Right? I would expect. Let's see if I can get that real nice and precise. That looks like about as good as it gets. I wouldn't really expect that. The trigger price typically only comes down to meet the price. You won't see it like go up, right? So there you go. That's got a nice looking little pattern to it. You got this pivot low here. The system will not calculate the stop until it actually triggers, right? But if I had to guess, if I was gonna guess, like say this thing actually did trigger today, then on tonight's update, obviously it would be on the triggered today list, and my guess is this initial stop would be somewhere down around the low of like this pivot low. That would only make sense. And here's another thing to consider is on ConAgra, the average range is 2.4%. So it's fairly tame stock, right? And that's something else to consider. Most of these are pretty big cap, big name stocks. And so, 2.4% is the average range over the past month. And what's interesting about that is that most charting programs use an ATR 14, right? And so Jeffrey's got his own little way of doing it, where we compute the average daily range percentage based on the whole month, based on an entire month. And I think he ditches like the two longest and the two smallest range days or whatever to get like his own little sort of, what is the what is the most accurate average range over the last month percentage wise. And so that's a good way of doing it. But my point is that the craziness of back in March is going to start to drop off of this, right? So I mean, if you did an average range over the last 3 or 4 months, you'd come up with a much different value than if you just use the last month. So anyway, long story short, ConAgra's not looking so bad here. Last but not least, FCN. And wow, a lot of craziness over here in March. It's amazing that some of these stocks, like, yeah, I mean, it's just like a heart attack type of pattern, up and down from day to day. There was just no rhyme or reason to a lot of this. But anyway, right now, the stock happens to be in a decent little sort of pullback type of channel or whatever. And and I mean, here's the thing: it's like, go back to the beginning of January 2019, the stock's in a clear uptrend, right? I mean, really strong, good-looking stock, and then there was, this craziness, and so now, now it's in. It looks to me like, we're kind of getting to the tail end of earnings season, so this may have been like an earnings move these couple of days here. So now it's in pullback mode, and I mean, it's not the greatest looking pattern, and so, but looks to me like it's got some potential, right? It sort of depends on how it breaks, how and when it breaks out of this channel. So, out of all the ones we looked at, um, there's a couple that just don't look all that great, and there's a couple that look really good. And so you can go through and kind of eyeball them yourself. And so there was a couple of them looked really good. I think well, Gilead looked pretty good. CAG looked pretty good. And real quick, I just want to review here so that I can. There you go. General Mills looked pretty good. So those may be the ones that you want to focus on. So anyways, yeah, pretty much covered it. The closed trades have been updated. It's kind of a mixed bag over here on the closed trades. We had some, and that's what we were having the problem with was since all the data files got messed up. I'll just run down these real quick. There was this VRTX, which was never hit the target was way up here. Came kind of close to it, but never actually hit it. But yeah, had a nice upswing, a little bit of follow through, and trailing stop came up. This whoop TDoc TDSC, yeah, this one like didn't get much follow through and just reversed and came back down. Yeah, there's some rotation that happened in the and probably seeing that again today. Like I haven't been paying a whole lot of attention, but what we had recently is like a bunch of the favorite stocks for the new normal or whatever had these big run ups, and then all of a sudden, I guess people decided to take profits in those and sell them down. um, JD had a nice channel breakout, really nice, significant run. Started getting extremely volatile up here, and then that trailing stop. There's probably a trailing stop somewhere around here that looks like I'm missing, but it did okay. Actually, yeah, it was like 13. That was the 13% from the trigger to the stop. So, and then there was the GLD, which is kind of trading sideways. It was a nice idea, I thought. I'd never seen a GLD as a potential candidate, and so it looked pretty good. But when it sort of broke out here, it just didn't get any follow through. So it was worth a shot, I suppose. But you can see that the trailing stop and the price here was nominal. As a matter of fact, it looks like yeah, it looks like 0.5% or something. The trailing stop. I'm sorry, the trailing stop got hit at 162. I never added that to here. So yeah, sometimes depending on what it is, I don't always, when the trailing stop gets hit, then I don't turn around and say, oh, well, let's add to the trailing stop to the chart here. But in this case, since I'm reviewing it, it would make sense. So there you go. So this actually, this is kind of the idea of it. It's actually a pretty good idea if you think about, taking a shot at this and getting that trailing stop, up the break even pretty quickly, and then it either keeps going and it works or it doesn't. So in this case, no big deal. But anyway, so there you go. There's the all the closed trades now are in here. There was a couple other attempts at a couple other attempts at some ETFs that didn't work out, but there'll always be new opportunities. So right now, anyway, a couple of these open trades are going to get closed today, and we got a couple other decent stocks that look like they'll trigger on any strength. Right now, the market looks like it's kind of selling off a little bit, so maybe here's what I'd like to see is I'd like to see, I'd like to see an actual sell-off. Notice what you got here, though. Let me go to the SPY real quick, and I'm gonna wrap this up. You've got a couple things going on here. You got these higher lows, right? You got sort of like the market's like sort of stair stepping up, right? You've got a series of this is kind of an odd little pullback here, but you've got these little this little sort of stair stepping pattern higher, and so it would sort of make sense at this point, to get a pullback. And I mean, you get a pullback of that magnitude, it's going to seem like a lot. It's going to seem like, oh boy, the market, people will be like, I was going to retest the lows or whatever. This is it. But it's kind of been normal for the market to sort of, run up, have a couple of day pullback, run up, have a decent pullback, run up. This one was kind of significant here. And so, based on, and of course you can see that it's higher highs and higher lows, although this was kind of a little bit of an outlier. And so a pullback right here would be perfectly normal and nothing to fret about. Now, unless some, really bad news comes out and it sells down. So on the actual S&P index, to me, this red line, which I've had on here a long time, I had this red line on here, when the market was selling off, and it was based on these two lows back here. So that's the line in the sand right there, if you ask me. Right about 27, 30 or so. See that low right there, 27.28, 27.22. So I call it 27.25, right? That's sort of, and we're way past that. So right now the over and under on the S&P is 3,000. Obviously, big round number, and we've had 2 days where we've poked over 3,000 and and not been able to close over it. And so also, that's right, literally like on the S&P, the 200-day moving average is at 3,000, right? So that's the over under right now. A bit of a pullback would not be a huge big deal. And so it is what it is. So, hey, well, thanks for joining me, and I will see you guys back here next Wednesday, and we'll take it from there.